Okay, welcome back. So this is where we left off. We just finished the whole section about the sales process, right? That covers chapters 2, 3, and 13. All right. So now the next section that we're going to be taking a look at is going to be dealing with purchases. This is going to be 10% of your exam, so approximately 5 questions, okay? So again, you can have a variety of questions. So again, a student must know, all right? Chapter 4, right? First thing that we have here are your expenses. So first thing is first is we got to know who should be on the list of your vendors in your vendor center.
Oh, your vendors.
Exactly, right? Your vendors, which are people who either you purchase supplies from, so purchase inventory, right? People who provide services for you, okay? People who are subcontractors, okay? Including your 1099 people. They are going to be under your vendors because they either are providing a service or a good for you, all right? So most likely it's going to be any person that provides a service or good to you, right? Are going to be your vendors, right? How to use and / navigate the vendor center. All right, so first off, let's talk about what is in the vendor center. Okay, what do you normally see when you go ahead and open up the vendor center?
The vendors, the balance,
Good.
all the information, address.
Mm-hmm. What else? You got their vendor balances, okay? Transactions, right? And what else? You can create transactions, right?
Yep.
Okay. So there you go. How? So your vendor center should show you list of all the vendors with the account balances that you owe. Okay. It will give you overview of information such as addresses, phone numbers, contact information. Okay. It also gives you a list of all transactions that you have incurred with the vendors. Okay. It is, and when you navigate the vendor center, you can add any transaction that deals with the vendor. Okay, whether you are making a purchase order, right? You are entering a bill, okay? You're making a bill payment, right? Etc., etc. Okay, good. All right, next question says the different workflows for making purchases and how to enter transactions in each workflow. So if we're going to start first off is the very first one, which is to enter the bills and using the bill payment to operate. So in this case, right, when we look at entering a bill, what does that do to QuickBooks? Right? What does that do for the accounting in behind the scenes? Okay. If I enter in a bill, what account am I increasing?
Accounts payable.
You're increasing your liabilities, right? Because these are the vendors that you're using in order to provide a service for you. So in this case, every time you enter in a bill, right, you are entering in accounts payable, which increases your accounts payable, right? So in this case, enter bills, right, which increases your liabilities, right? And in order to decrease your liabilities, you do need to use the bill payment window. Okay? You cannot write a check and it will associate it with it. But in this case, with the new 2021 QuickBooks, yes, if you use a check, right, and you go ahead and type in the vendor's name, QuickBooks is smart enough to be able to recognize that you are trying to pay a bill. Okay, it's just not recommended to use the write a checks window because, again, right, we're creating an expense, and in order to decrease the liability, we need to use the bill payment. That's the proper way to do it. However, QuickBooks is smart enough, right, because that's the difference between 2018 and then the new books today, that it does recognize that when you enter in using the write a checks window to try to pay a bill, it will recognize that immediately. All right. And it will give you an error message saying, hey, are you sure you're trying to, they're trying to ensure that you're not making a double expense. So in this case, yes, you can use write a checks window to pay a bill off, but it's just not recommended. Okay. So they recommend you, if you are trying to pay a bill off, use the bill payment window. Okay. All right. What about writing a check? How do I use purchases to write a check?
By using a purchase order
Okay, so
number?
we're going to talk about purchase orders a little further down. Okay, so in this case, I want to make a purchase of something, right? And I'm going to use the write a checks function. All right. So how do I write a check?
You would use the drop down to put your, who you want to pay or the check.
Mm-hmm. Vendor name.
Yeah.
And then
And then
The amount?
the amount. And you're going to use the bottom section to either enter in an account,
Where you describe the job that you're paying for?
not the job.
I mean, the memo describing what you're paying.
You're going to enter in the account or the item that you're purchasing. Okay, perfect, good. And that's it. Okay, what about how to use a credit card? How do we do that?
go to the credit card registry.
Okay, you could use the credit card register. Okay, but what's an even more quicker way?
So under pay bills.
Not pay bills. I want to buy something and I want to put it on a
Okay.
credit card.
Purchase. Go to your purchase orders then.
Not purchase
The-
orders.
the register, and then you look for the check, credit card, I mean.
You're getting close, Marlene. right?
You go in the register and then you found not the check account, but the cards account.
Okay, so that's what Alan just said, to use the credit card register. But what's a quicker way?
What's the question again?
The question is, how do I pay for something using a credit card?
First, you gotta check the credit card account. I mean, not the checking account.
Not that this is checking is separate from a credit card.
Should we go over on the right and enter credit card charges?
Exactly, because that's how we use the credit card to pay for things. Is you got to go down to the credit card, enter credit card charges, or you can go through the credit card register. Okay. But in this case, the go-to or the one that's most readily, easily available that helps you process it a lot quicker would be to enter credit card charges. All right, that's how you can use a credit card to pay for stuff. Okay, either enter credit card charges or use the credit card register. Okay, right? But in this case, right, if you use the register, right, you're defeating the purpose of using QuickBooks for its forms and all that stuff, because essentially that's supposed to help you make it a lot easier to fill out than it is for a register. Right? Okay.
So I have a question.
Mm-hmm.
If that was on the test, would the answer Alan gave, would that be wrong?
That could, if it's a multiple choice question, then it will list out those options for you. So if you see both of them, then those are both correct. Now, if it's a navigation question, maybe entering the credit card transaction might be one of those unavailable options. So yes, that second option where you use the credit card register is an available option that you can do to enter in a credit card transaction. That is correct. Okay. However, if you use the checking register to put down a credit card transaction, that is wrong, because credit card and checking are two separate accounts. One of them is your actual money that you have, and a credit card is money that you don't really have. It's you're borrowing money. Okay, so that's the difference between a checking account, your asset, a credit card is a liability. Okay. Now, if I am able to use the credit card or the credit card register, right? How do I enter in a debit card transaction?
It's like you pay cash, no?
That's essentially what a debit card transaction is, yes. But how do I enter it in?
Checking, the same.
Checking.
Yeah.
Okay.
I don't know.
Okay. You started off good, so yes, you will be making a reference to the checking account, because that's, if it's a debit card, it's your bank card that's directly linked to your checking account. Okay. However, how do I enter that into my books?
Checking register.
So checking register. Okay, good. Use the checking register.
And then when you're in there, when it says select account, you put the debit card.
Do we have an account for a debit card?
No.
Yeah, we would write
We
it
do?
down.
I don't think so.
Okay, so Melinda, you are heading on the right way. It's the same thing as using cash. Now, what's the difference there? Because you're not really using cash, right? You're using a debit card. It's not a credit card.
Sometimes the transactions don't come out immediately.
Okay. No, so here, let's go ahead and visit that little
The
checking.
fee, the fee that the fee that you have to pay for the credit card.
We're not talking about a credit card. We're talking
Small
about
fees.
a debit card.
A debit card, okay. No, I just trying to.
No worries. I'm explaining so you know. All right. So in this case, right, I'm in my checking register. That's correct. Okay. Now, if I want to pay for something using a debit card, this is how you do it. All right. You're going to enter in whatever expenses that you are doing, right? Whether you paid in store, so you're going to pay for the vendor, all right? You're going to enter all the information it needs to require for that transaction to happen. The only difference is instead of a check number, right? You're going to change this and write debit card, so DEB, okay? And that will be in another way of how you can record debit credit card transactions, okay? That's the only difference. So in this case, right, we can use the write checks window, okay? And we're going to code it to be to our checking account, but instead of assigning a number, we could go ahead and type in debit right here, okay? And that will be in place of, instead of a check that you wrote, it's a debit card that you charged. That's the only difference, okay? Your book does tell you that it's very brief. It's a small section, but it does tell you that that's how you record debit card transactions, because not you could be you know, on the road, right? And you have a debit card on you, but you don't have your checkbook on you. That's how you enter it in, so that you update your QuickBooks if you're going to be using your debit card for the bank. Okay. So in this case, right, you're going to go to either use the checking register, all right? You're going to make sure you're in the checking account, all right? And this time you're going to enter the transaction, but instead of using a check number, you will enter in debit. All right. So it represents that you use your debit card. Okay. Right. Okay. So here you go. How do you record a transaction in the purchase workflow? So this is the question where you're going to have to look through. Okay, hold on. In the purchases workflow. Okay, so this question right here pretty much answers or the question that we answered previously, right? You have these three options to enter in a purchase work through the workflow, right? If you're going to purchase something and you're going to be billed for it, you enter the bill, then you pay for it, right? If you purchase it using, if you're manually writing a check, you would use the check register. If you are at the store and you have a check readily available, or if you purchase something and you're going to enter in a check, you could do it that way too. So this question is in regards to the workflow up here, okay? Because chapter 8, there's an actual section where it says the inventory workflow. So that's how you record those transactions. There is by entering the items or the expense that you're purchasing and enter in whether you're entering a bill, writing a check, or using the credit card or debit card. Okay. How and why to record a vendor credit. So let's talk about why first. Okay. What's so important about a vendor credit? Why would you need to record a vendor credit?
To keep accurate account of your inventory.
Not inventory per se.
To record any overpayments you might have done.
Okay, overpayments. Okay, that's a good one. Overpayments to vendors. Okay. Why else would you use a vendor credit?
To any return.
Any returns, good, because as a person who's purchasing inventory or purchasing a service, right? If you're not satisfied with the product that you got, or maybe when you open up the package, right, of your inventory, you found broken items. You can't sell broken items, and you don't want to accept that you paid for broken items. So definitely you would need it for in case you return any purchases, okay? Or if any of the items are defected, all right? We could do it for overpayment. What else can you use a vendor credit for? All right? Vendors can sometimes give you what?
Half of the job.
Discounts.
Discounts, thank you. Discounts. Good, right? They can either give you terms, right? We can also, if you just have a credit with this person, or if they just give you coupons, right? That applies a discount, right? That gives you a specialized discount code. You can use a vendor credit for that. So for any discounts is a good one, right? Because once again, this is us dealing with a vendor credit, not the other way around, okay? All right, so in case they give us discounts, in case we return an item, in case we overpaid the vendor, that's the reason why we would record a vendor credit. Now let's talk about how. How do you record a vendor credit?
To start by go to write checks.
A bill.
No, but a bill, yes.
I'm sorry, I thought you said deposit, not credit.
Okay, no worries. Not a credit memo. It's not a credit memo.
No, a bill.
Yes, you do. You use by entering the bill. What's in the bill? So Isabel says you. Go ahead.
You can add a line.
No,
No?
no. The biggest hint already, Isabel said enter a bill.
Yes.
Inventory.
No.
No, and you credit. No.
Where?
You fill everything and then you close that and then.
No.
Under items, you add a line?
Not under. Nope. Okay. Okay. So I'll go ahead and give you the answer to this one. So here we're in the enter bills location, right? At the top of the window, you have the place to click on credit. And that's how you fill in the vendor credit. Okay. So any way that you can enter a bill, you have the option to enter in a credit by switching the form from bill to credit. All right. That's how you enter in your vendor credit. Now that's the difference between a credit memo and a vendor credit, okay? As they do the same thing, right? You're reissuing whatever it is that you have to reissue, but the difference here is this is a vendor credit versus a credit memo. Credit memos is just strictly for customers, okay? All right? If you talk in context where you go out into the real world, yes, you can refer a credit memo for both vendor and customer. But in this QuickBooks, right, being very, very specific about exactly where to go. If you say credit memo for a vendor credit, that's wrong. Okay? So that's why you have to read the information very carefully because they could trick you. They could say, how do you enter in a credit memo? You need to remember that's referring to a customer, not a vendor. Okay? The way that they'll tell you is they'll say vendor credit. Okay, so very, very, very specific that you do know the difference here in QuickBooks. But in the real world, yes, you can use credit memo for both vendor and customer. Okay, so right here, enter bills, right? Switch to credits at the top of form. Okay, and then after you receive that, you create that credit, that vendor credit, you're going to apply the vendor credit through the pay bills option, add in credits. Okay, so what am I talking about? So once you've actually entered in your bill credit or your vendor credit, okay, when you go to pay the bill, right? How do you apply it to the invoice or how do you apply it to the bill? Down below, you'll have options right here where you have your terms and you have your credits. So in this case, you don't have any credits now because I didn't enter one in, but that's how you would apply the credit to the specific bill by using this window right here. Okay, or in this case, it's called set credits. So I'll erase that and say it's set credits. Okay. All right. Good. So remember, you need to know all the ways to enter in a bill because you could be asked a navigation question to say, how do you enter in a vendor credit? And if you only know the home page, and they said that option is not available, you could lose points, right? You lose 1 point right there, right? Or you can answer that question wrong. You need to know every single way that you can enter in a bill because ultimately that's going to be able to give you the answer to switch to the vendor credit. Okay, so again, entering bill, you could do that through the home page, the icon bar, which you go to the vendor center. You could do the vendor's menu to enter in a bill. Once you're in the vendor center, you have 3 options, right? New transaction, right click on that person or manage transactions. And if you're using the bill tracker, you also have that option too. Okay, so make sure you exhaust every single way because on the navigation portion, you could have more than one answer. Okay. All right. It would be nice and easy if everything could just be entered through the home page, but in reality, no, that you're trying to be a master of QuickBooks. Okay, you need to know the ins and outs and how to be able to enter in a transaction using multiple ways. Okay. Next question here, how and why to record a vendor deposit?
You go to write checks.
Okay.
And down below, under expenses, you would add an account payable.
Good. You would refer to the expense or the account, right?
Yes.
To be accounts payable. Good. Right? And then from there, what happens next?
Well, after you fill out,
Can I write the vendor name and,
Mm-hmm.
and the job field and
Not the job field. So let's say we already wrote that check, right? Go ahead.
vendor name as a customer?
Set the credit.
Yes, you're gonna click set the credit. Yes. Okay. So once you write your check, right, and you linked it to the accounts payable account, right, and the vendor that you put in, whether it's a supplier, right, then once you record this check, okay, that you are making a payment to the vendor, and when you receive the bill, right, you will apply that credit by clicking on set the credits, and it should pull up that check that you wrote for the vendor deposit. Yes, that's how you do it. Okay, good. So Okay. So once again, once you've written that check out, in order to apply it to the invoice or to the bill, you're going to click, you're going to apply the vendor deposit by setting the credits on the pay bills window. Good. All right. Last question in section 4. All right. How do you use the loan manager? All right. This is something I added in here because, right, this is a new feature and you never know. You might be asked this question. Okay. All right. They don't dedicate 5 or 6, 7 pages to this section if it's going to be a missed section. You know, it's better to learn more than to be to understudy. Okay. So in this case, how do we use the loan manager?
Banking menu,
Banking menu. Good.
loan manager, you select loan manager.
Mm-hmm. Good. Okay. So if you are planning to have a loan, which most common businesses do, whether it's a vehicle loan or whether it's a business loan in general, you will have the opportunity to have to exercise and use the loan manager, right? The loan manager allows you to do 2 things. It helps you calculate the interest that you'll be collecting. It will also help you manage your bills too, making payments on time. And on top of that, with the loan manager, it also allows you to make multiple payments too, right? And it tells you, do you want the payment to go towards the principal or do you want it to go towards the interest? Now, that's only rule that you can use that to apply to the actual principal is if you're making multiple payments. Okay, so good. So that whole section in chapter 4, it's the very last few pages of the book. We'll go ahead and read up this section right here, just so then you know the basics on how to do it. So when you go to the loan manager, right, you have your options to either enter in a new loan, to schedule a loan payment, or to pay for the loan payment, right? Schedule payments. So then once you go in there and you're going to be entering in a new loan, right? You're going to be putting all the information on when you got that loan, when the first payment of the loan is, what is the interest rate, how many payments do you have on it, and et cetera, okay? Now, that you must enter in the loan prior before you can use the loan manager, okay? So when you're purchasing, whether if it's a truck, you need to be able to enter that in to represent that you have the loan somewhere, because the loan manager isn't you recording the loan, it's to help you manage your loan, okay? That's the difference, okay? You need to enter in the loan first before you can use the loan manager, all right? Because it's going to ask you which account are you referring to, and you're going to pull up whatever that loan that you took out for, okay? So when you enter a new loan, you're going to enter in details about loan. For example, how many payments, interest, due dates. Okay.
Account name, vendor.
Mm-hmm. Good. All right, etc. Okay. And then you can also use loan manager to make payments. Okay. Okay. Good. Right. Now, this is where we're going to be diving into inventory territory, all right? Where's chapter 8, which was all about items and inventory. So very first thing that you need to know is how to create a sales tax item, okay? Straightforward, right? It's an item. You're going to go to items, list,
No items.
list,
Item list.
menu. Or in this corner, let me rephrase that. List, menu, okay? You're going to go to items list.
Item list.
New item.
And sell tax, you drop down the screen and you find the sell tax.
Good. Now, question here. What's the difference between a regular sales tax item and a sales tax group item? And a sales tax group.
Let's see the group.
The group is like a bundle?
Yep.
In a bundle, how so?
Tax group.
Okay. So in this case, this gives you,
The sales tax is used for to pay sales tax.
right, to pay sales tax to who?
So tax agency.
Tax agencies. Okay. So how do I know which one to use if I'm going to use a sales tax item versus a sales tax group item? You're on the right track, Isabel.
It depends the product that you sell. Like the group sales is a product that you
No.
no, I don't. I
Okay.
lost my.
All right, it does have to do with the tax agencies, okay? So, a sales tax item, right? If you are only making a payment to one agency, okay?
Oh, you pay more. You pay how you call state and federal.
Yes. If any reason, right? You have to pay more than one place, right? If you have to pay your separate state taxes versus your separate local taxes, then you use the sales tax group item. Yes, okay. So make a payment to more than one tax agency. Okay. And I'm going to put example, okay? If you pay the state separately from local, okay, then you use a sales tax item. In order for you to even create the sales tax group item, you need to create the sales tax group first, okay? Because again, you have to create the one for the state, then you have to create another one for the local, and then you use the sales tax group to combine the two together. All right, so bundle was on the right track too. So that was right. But in this idea here, the idea is in order to use either or, the reason is because you're making payments to two different tax agencies. Two or more. One or more than one, for sure. Okay. For any reason that you have to pay, any city or local taxes. Okay. Or if in case like, I don't know. As far as I know, sales tax is usually broken up from federal and local. That's it. Okay. Okay. Okay, next part here is how to complete the inventory workflows, okay? So we're going to start for the very first one is when we use purchase orders, okay? When we use purchase orders, okay? So looking at the inventory workflow, when we make our purchase orders, right? That's going to be from here. We're going to make our way to the receive inventory and then make our way to enter the bills against inventory. Okay? Now, with that being said, there's a few different things about here because we have two options, right? If we use purchase orders, right? In this case, right, a purchase order serves only one thing, and that's just to make an order. This is going to be called a non-posting transaction because it does not affect anything at all because all you're simply doing is just ordering an item, okay? Now, once you've done the purchase order, you get two options, okay? You have one option where you're going to receive the items with the bill, or you're going to receive the items without a bill. Okay? So let's talk about receiving items without a bill. Okay? What happens when you receive items without a bill? Okay? What happens if I receive items without a bill?
We can't put it into the inventory?
Okay, in the accounting behind the scenes, yes, you are going to be putting it to inventory. But what are you going to be filling out when you receive items without a bill?
The purchase order?
No,
Inventory item.
not an inventory item. Okay? If I receive inventory, right, without a bill, okay,
A vendor's credit?
not a credit,
Receive inventory without bill.
right, what form pops up? Obviously, you're not going to be entering a bill because you didn't receive a bill. So what would you get instead of a bill?
Credit? Oh, item receipt.
You get an item receipt, okay?
Receivable account.
Nope. No receivable account in this one. You're going to get an item receipt. You're going to fill it in, okay? So an item receipt, right? It acts as if it's the packaging slip. So if you guys remember, right? Oftentimes vendors, right? They might not have enough inventory in their warehouse. So they might just ship out whatever they can. So in this case, they're going to send us a packaging slip. Okay? And what we do with that packaging slip is we're going to record it as if it is an item receipt. You okay? Okay? You're going to get an item receipt, also known as the packaging slip. Okay? The packaging slip should give you all the details on how many items should be in the actual box that was in the shipment. It should normally tell you shipment 1 out of 2 or shipment 1 out of 3, right? So you actually know how many more packages you should be expecting. Okay? So once we do that, right? Then we have to enter in, as many packaging slips until we actually receive a bill. Now, how do I convert my item receipts into bills? Okay. If I record all my item receipts, how do I convert them into a bill?
Purchase order?
Nope. I've already received the items. What do I need to make a purchase order for? That happens before. I've already received the items. Now I need to
Oh, you
record
create
the bill.
A bill, enter the bill.
No, enter a bill is wrong.
You select the item and then you enter the bill.
No.
No, okay. I tried.
Okay. Let's take a look at our
Purchase
Say that again?
from the open purchase.
No. Okay. Let's go ahead and take a look at the workflow once again. Okay. If I received items, right? What's the next step in the line of the workflow?
Enter the bill again.
Enter the bill.
Against inventory.
Enter the bill against inventory. So if I click on this, the first thing is going to ask me what kind of item receipts will I be converting. Once I get that item receipt and I click on it, I click OK, it converts the item receipt into a bill. Okay. Again, if you read the book, if I open up my item receipt at the top of the window, will give you receive bill. All right. That's the second one that you could do. Okay. So that's how you convert your item receipts into bills, is by either clicking enter against inventory, or you can select that receive bill at the top of the item receipt window. Okay. So enter bill against inventory, or
Create the bill.
Okay, so that's one line of workflow. Okay. Well, the other one is once you create your purchase order, the second option is what happens if I receive my inventories items with the bill.
Make a purchase order.
That already happened. What happens if I put in my purchase order and then the next step I have to do is receive the items, but this time I'm going to receive the items with the bill? What happens?
You create the purchase order. Oh,
I already done that.
already. Okay.
So what happens if I receive the bill with the inventory?
Right here saying the preference number.
So if I've done my purchase order, right, and I'm pending on receiving my items, and let's say the next couple of days I receive my items and it comes with a bill.
Create a vendor bill payment.
Not yet.
Receive the inventory.
If I receive inventory with a bill,
Receive inventory. Okay, enter the bill.
okay, you don't use enter bills. It's not gonna, you cannot do that. It will tell you, no, you cannot do that. Okay? So if I go ahead and say I received my
So you're
inventory
doing the-
items with the bill, right?
The same.
What
The
happens?
same like you did before. Enter the bill. How you call that? The same like you did with the when you convert the item received. How you call that?
No, it is not the same, because if I receive my items with the bill, I'm not going to get an item receipt. That's the difference between those two workflows right there, is that one of them I'm getting a packaging slip. The other one, I'm just getting a straight bill. Okay? So remember, let's take a look at that one more time. Okay? If I choose that I have the items, right, but it didn't come with the bill, I'm automatically going to get an item receipt. Okay? And if I have an item receipt, right, that's where I have to take that extra step to convert the item receipts into a bill. But in this case, the question I was asking is, what happens if I received my items with the bill? Then I simply just record the bill. All right. It's the questions I'm asking is not as complicated as you guys think. All right. All right. This is very straightforward, point blank. It's in your book, 100%. All right. So if I receive an item with a bill, all I'm going to be doing is recording the bill.
The bill.
That's straightforward. Okay. I do not need to take an extra step to go against my inventory items to create the bill because I already have it. Okay. So that's a step, that's the difference here. When you do a purchase order, it splits into two options, right? You either receive a packaging slip or you receive the bill. Okay? And if you receive the packaging slip, you need to go one step more to convert those packaging slips into a bill. Okay? Where the other option here is if I receive my items and the bill came with it, automatically I just enter in the bill and that's it. Okay? And of course, after that, in order to get rid of the bill, you need to use the bill payment. All right? Never ever use enter bills if you have an item receipt. And if you do, QuickBooks will give you a notification saying, no, you cannot enter a bill if you have item receipts. If you're going to do that, you need to use the enter bills against the inventory. It will tell you that. Okay? So I'll make a note right here. Okay? All right, I'm going to put it in caps. Never use enter bills to convert item receipts. Okay? You will get an error message telling you to use the enter bills against inventory to record/convert item receipts. Okay? So if you guys want to test it, you guys can test it, but I'm telling you right now, you will get an error message because you cannot use enter bills to record the bill if you have item receipts. Okay? All right. Let's see. Okay. Good on time. How and why to create or use group items. Okay, we talked about this briefly in the items section, but let's go ahead and review it. When do you use group items?
When you make a bundle?
Yes, there you go. Good job, Manny. When you make a bundle, good. Bundle meaning when you put items together in a package. Okay. Whether it could be a service in a product, two products in a service, two products in general, right? And you're just building a package, then you would use it for a bundle, okay? All right, what's the difference between that and an inventory assembly?
With the inventory assembly, you create a new product, specific product, a special product that they ask you, no, something like that.
It's you create a new product from your inventory items. So again, you're combining the items to create a new product. Yes. And again, units of measure, right? We talked about this yesterday. Units of measure, right? When you buy in bulk but sell individually. Right? Good. All right, last chapter, or actually, yes, no, two more chapters, right? So in this section here, it asks how to set up, collect sales tax, and pay sales tax. So let's first talk about how to set it up. How do you set up your sales tax? Okay, in this one, that is in chapter 3. How do you set up your sales tax? Okay. How do you set up your sales tax? How do you let people know that you're going to charge them tax? How do you create these settings so then every time you do a sales form, tax is already automatically included?
Do you put it in with the customer information?
Okay. In this case, no. You can set up what taxes to charge your customers, absolutely. But in this case, I'm talking about in general. If these customers aren't your actual customers, or they're random people from the street that come in and just pay for something and then leave, right? How do I set up my sales tax?
Go to preference.
Preferences. Good. If you go to edit and you go to preferences, right? You can go to the section called sales tax. And then if you go to company, that's how you set up your sales tax, right? What kind of common product are you going to charge tax at, right? If you have a sales tax code already put into place, then you say anything that's taxable is going to be coded as tax. If there are services or things that are non-taxable, you code them as service, right? How often do you pay your tax agencies, okay? That is how you set it up, right? Who are the people that are often going to be charged sales tax, right? In this case, it's set up as out of state. Well, that's not true. It's most likely going to be either one of the others because, right, you have a store location. You have 2 of them. Most likely, those options are going to be either one of those 2 locations. So good. That is how you set up your sales tax, okay? Set up sales tax. You're going to go to edit preferences. Sales tax. And this is definitely going to be a company preference. Okay. We talked about how to set up your sales tax items, right, in the previous section above, right, in chapter 8. Okay, so chapter 8. Okay. And then sales tax codes. That's going to be in chapter 7. Okay, that's going to be under list management. So chapter 7, when you need to manage all of your lists. So sales tax codes is one of them. And last but not least, how do I pay my sales tax?
From the liability account?
No. And in this case, I will give you the biggest hint. You cannot use a write a checks function to pay your sales tax. Okay, once again, you cannot use write a checks window to pay for your sales tax. All right? So if I can't use write a checks, it's not an invoice. How do I pay for my sales tax?
Under managed sales tax?
Correct. If you go to manage sales tax, right, this is in chapter 4. You go here, you have your list of either you want to set up your sales tax, right? And right here, you have the option to pay your sales tax. And if I choose this, right, it's going to formulate a check specifically, right? In this case, there are options that you can choose to pay for sales tax, whether you send an actual check or it could be an electronics funds transfer. All right, most cases, it's set up to be directly deposited to the actual agency. So in this case, I can either write a check or I can forward them on an EFT. All right, and this one is how you're able to do it. And when you do pay for your sales tax, right, in your checking register, it will appear as payment to sales tax, not a regular check. Okay, so this is the only way that you can be able to do it. Either you go to manage sales tax, or if you go up to the vendors and you click on sales tax, you should be able to pay your sales tax there. Okay. Let me see. Where am I? Pay sales tax. No, that's payroll taxes. Where's sales tax? Okay, we're in not input up. Wrong one. So you go here, sales tax. You can pay your sales tax. Okay. So make sure that you use that because again, you cannot use your write a checks window because it's not going to associate with the sales tax that you've been collecting. All right, you must use the either the sales tax manager or vendors menu, sales tax options, and pay sales tax. Right? I'm going to make a note here. Do not use write a checks window. QuickBooks will not link the sales tax liability accounts. Okay? So you must use the pay sales tax option. Okay? Last but not least, bank reconciliation. Straightforward, right? As far as answering the questions here, how do you do a bank reconciliation? Pretty straightforward. How do I do that?
Homepage, reconciliation.
Homepage, good. Homepage. And you're going to click on reconcile. Okay. Exactly correct, right? If I go to my home page, I should have the reconcile button right there on my home page, right here. Perfect. Okay. Now, in this case, right, when we talk about reconciliation, you do have a couple things that you can do. What accounts can you reconcile? Okay.
Saving account, checking account, credit card.
Good.
Your charges and service fees.
Good. You could do bank account, credit card, savings. Okay. More specifically, what about account types? So you can reconcile anything. Yes, you could do liabilities because that's what a credit card is. You could do a bank account, which is an asset.
An asset, credit card.
So I'm going to put in parentheses anything that has a register. So therefore, your assets So therefore, you could do your assets, right? Current assets, liabilities,
Equity.
equity. Good. You could do all of those accounts. Okay. Good. Now again, reconciliation is pretty straightforward as long as you're able to compare your bank statement or whatever statement that you have. Okay. First rule is your ending balance or your beginning balance must match before you start your reconciliation. Okay. A few rules there. So, okay. All right. So that whole chapter is chapter 5. Is the very, no, it's actually in the middle of chapter 5. Okay. Easy, straightforward. Okay. If your ending balances do not come out to 0, you need to do or run a discrepancy report. Okay. Right. Now that we're done with that section, our next section we have here is going to be payroll, which is going to be 12% of your exam, okay, which is approximately 6 questions, okay? A student should know, right, chapter 10 and chapter 11, right, was all about payroll. So chapter 10, let's see, the difference between the payroll services that are available in QuickBooks, okay? What are those payroll services? Okay, there's 3. Anybody? What are those payroll services? It's the first thing in chapter 10 that mentions it.
Basic, enhanced, and assisted?
Yes.
Payroll account, payroll item, employees opening balance. That's what it is.
No, I'm not talking about that. I'm talking about the payroll services that QuickBooks or Intuit offers. So basic, enhanced.
Oh, you have a manual and electronic or whatever you say that I forgot how you.
No, this is the payroll services that Intuit offers for you to do your payroll automatically. You pay extra to calculate everything for you. Okay. Right? Again, if you need to know more information, again, you either visit that website on the link in your book, right? So you can know the difference between the different services that each one provides. Okay?
There are the basic and the assisted and no.
Yeah, that's
Is
it.
that what you said?
That's what I'm saying. Yes.
Oh, okay.
Okay.
I wasn't sure.
Yeah, so basic, enhanced, and assisted are the 3 payroll systems that you can obtain. Okay. Okay. How do you set up payroll using the payroll setup interview? Okay. So in this case, I broke it down for you to make it easier for you. What was that, Isabel?
The 10-step checklist, the 10 step that you have to do to set up the payroll.
Yes. But in this case, I'm talking about the interview itself, not what you have to do for the payroll by itself. Okay? Because that gives you a list of everything that you need to do before you do, as you go through the interview. Okay? So in this case, you need to be able to set up your compensations, benefits, and deductions. Okay? You need to know how to set up your employees, right? What information do you need, right? So let me go ahead and put that in parentheses. What info do you need to set up employees? So that could entail, right? Name, address, right? Things that you could collect from your employee, a copy of their birth certificate to see if they are a natural citizen, right? Because they have that section whether if they are not a natural citizen, therefore they need to provide you either the temporary green card that allows them to work or a temporary social security that visa, anybody that's has a visa that's traveling over the United States that can obtain a job while they're obtaining their visa. All right, you need to have that. Okay, that's also going to tell you the legal age you are, right? Are you legal enough to even work? If you're under the age, then obviously you can't work or you're going to be limited to restricted hours. Okay, other things that you could have is social security card. Once again, if to prove, or not to prove, but you need this so you can file taxes. Okay, you need the information on a W-4 form because that's going to tell you as an employer what taxes that they want to withhold from their paycheck. Okay, all right. Other than that, those are usually the things that you should have. Again, if you're going to be running a background check, that's not an obligation that you need to collect from your employee, right? If you're going to be doing that, those are going to be company policies to prevent your employees, you know, if they're a criminal, you need to run their background check. You need to, you know, if you're going to do drug testing, that's going to be something else that's not part of this interview. Okay. How to set up federal and state taxes, right? Straightforward. This is all going to be so this is going to be your items that you need to know. So any federal taxes, right? Federal taxes could be your FITW, right? Your federal income tax withholdings, right? Your Social Security, and Medicare, right? For both employee and company, right? Other things that you have to be subject to do is FUTA, which is your federal unemployment. So federal unemployment. Okay. Okay. Your state, okay, could be subject to anything, right? Usually common one you'll see is state unemployment. Okay. Also known as SUI. Yeah, SUI. Right. And anything, if you're in California, like we saw the example, right? You have to pay for the disability and you also have to pay state.
Retirement benefits.
So what about your retirement benefits, right? Okay, that's going to be part of compensation, deductions, and benefits. All right, you need to know to be able how to set up your sick pay, vacation pay if you offer it, okay? And how to keep track of it, which is pretty straightforward, right? You would use your timesheet, which we took a look in Chapter 9, okay? Timesheets. All right. All right. You need to create the item for sick pay or vacation pay, whatever it is that you offer. Okay. How and why to set up payroll schedules. What's the importance of that?
Importance of
So the employees get paid on time,
Okay. How so?
depending on if they're bi-weekly or weekly.
Good. To get paid on time. Now, the importance thing here is, yes, to make sure that the employees get paid on time. But if you have employees that are set up on different pay schedules. So for example, right? Maybe I have my salary workers. They get paid every semi-monthly. So that means they get paid on the 16th and the last day of the month. While my hourly workers, okay, could be paid bi-weekly. Okay? So the importance of using the payroll scheduler is to ensure that you pay your employees on time according to the pay frequency that you scheduled them for. Okay. And last but not least, from chapter 10, how to be using employee defaults to help set up each employee's earnings and deductions and so on and so forth. All right. What is so significant about using employee defaults? Okay. Why use employee defaults? Go ahead.
So you can set it up for new employees.
You will set after.
Good.
You don't have to retype everything.
Correct. To set up new employees, okay? So remember that. New employees, right? To help save time. Right? If all your salary employees, right, they get the same benefits and the same deductions, right? Versus your hourly, right? If you're going to change those defaults to say this is for an hourly to salary, right? You can set up your employee defaults to be able to save you some extra time by instead of having to type everything in for each employee, right? Those things could be automated for you if you set employee defaults, okay? So set up new employees, okay, to help save time filling in info for for payments, okay, for deductions, okay, benefits, okay, even pay frequencies. Okay. Now the rule here is that after you set your employee default, right? So let me put this note here. After you set employee defaults, right? That means once you do this, right, every time you add in a new employee, it's going to automatically fill this in for you, okay? So anybody that came prior to your employee defaults, you would have to manually edit their information, right? And you can always modify the employee defaults if you're trying to put in a group of employees, right? If you choose to put all your salary people in first, then you go back in there and you change your employee defaults. So then the next time you add someone in there, it could be your hourly workers. Then yes, that's how you would use the employee defaults, is that after you make those changes and you set those changes, every employee after that you enter in that's brand new will have these default settings. Okay, so after you set the employee defaults, any new employee will have the default settings. Okay, and you can always make more changes, okay, to the default settings for a new group of employees. Okay. All right. Almost done, guys, with this section. Section chapter 11. How do you run payroll? Okay. What are the steps to run payroll? Okay. How do you run payroll?
To the employee center?
Through the employee center. Good. If you go ahead and do that, right? You should be able to pay. You should be able to do three things. What should you be able to do?
Pay your employees,
Mm-hmm.
pay liabilities,
Mm-hmm.
and file the forms.
Good. So in this case, right, how do you run payroll? Pretty straightforward, like we mentioned before. You could either go on to the payroll center if you have, okay, if you, sorry, I have this on caps. I don't want to be screaming at you guys. Payroll center, right? Which once again, that's only if you have subscribed to a payroll service. Okay. But if you are doing manual payroll, then you would use the employee center. Okay. Then once you're in that window, you have three options, which is to pay employees, okay, pay your liabilities, and lastly, file your forms, okay? Now, there's a difference between the different settings because remember when we took a look on this on Monday, on Monday, we saw that if you use the basic payroll services, you cannot file forms, okay? Or you cannot choose to have the option to help QuickBooks file the form or fill out the form for you. You only have the option to pay your employees and pay your liabilities. But as you progress in those choosing a higher version of the payroll services, then you can have QuickBooks help you file the forms for you. Okay, these forms are the 940. Okay, for the federal 940 and 941. Okay, for your independent contractors, it's all that 1099, DIV, and NCT, whatever, all that stuff, right? Okay. So that's how you file forms. All right. So that's the options that you will get, and that's how you initiate this payroll process is by starting with from the first step, which is to pay your employees. Okay. Good. Next question says, how and why do we pay payroll liabilities? Let's talk about why. Why do you need to pay your payroll liabilities?
Because they're taxes?
They are taxes, right? It is taxes, right? And it is a legal obligation to pay liabilities, all right, as a responsibility for having employees. Okay, right? That's the reason why you have to pay these taxes. If you're having these people work for you, you have to pay for their Social Security, their Medicare, any benefits that you provide, right? Well, that's not a tax item, but taxes would be if if they go unemployed, you need to pay for the federal employment tax, right? If they, in the state, right, you need to also apply for the state unemployment as well. So all of those things there, right? And as far as having the employees section where they're responsible to pay into their own Social Security and Medicare and federal income tax withholdings, it is your responsibility as a company to pay for them. Okay? So again, it's a responsibility for having employees, and you are obligated. It's an obligation, okay, that you have to pay those taxes off. Okay? Now, how do we pay those taxes? Straightforward. Simple. You just click on Pay Liabilities. On home page. Or Payroll Center. Okay? Straightforward. We talked about how already. Okay? How to prepare payroll forms 940 and 941. All right? Usually this is based off of the taxes that you pay. Okay? So what the 940 and the 941 does is it basically when you file for those tax forms at the end of the year, it basically sums up whether you paid all the taxes that were required for having your employees, if you paid them on time, etc., and it gives you a copy of the W-2 forms for not only your employees, but for the company as well. So how you file them, once again, you should have a section in your book that talks about that, I believe. But in this case, it's just mostly based upon the tax payments that you make. Okay. Again, if you don't know what the 940 or the 941 does, I would highly recommend you to go to irs.gov to learn more about it. But in this case, as far as general QuickBook information, you just need to know that's going to be based on the tax payments that you make. So the payroll taxes, let me make that clear. Payroll taxes, payments, and if you have a higher services for the payroll services, you'd be able to process that by clicking file forms. Okay. All right. Then last but not least, chapter 9, time and billing. Okay. How do we keep track of and make our, how do we keep track of time and use it for either payroll or for paying or for invoicing customers? Okay, let's talk about using timesheets for payroll. Okay, so for payroll, how do we use timesheets for payroll?
Through the employee center?
Through the employee center, good, right? Now in this case, the question is, how do I transfer the information from my timesheet into my payroll?
By clicking on one of the employees?
Yes, okay, but in this case, right, I'm talking more so for
Create
using the timesheet to pay the
create an
employee.
invoice.
You do not create an invoice.
No, actually.
That's for the second one. Okay, so in this case, I did mention this, it's very brief, right? Because when we talk about payroll, right, we didn't need to use the timesheets because, right, the reason why we didn't have to use timesheets is because if you fill out the timesheet itself and you start processing payroll, it will automatically update the information for you. Okay, but let's say you choose the enter time, right? You should be able to, I put the wrong one. You should be able to transfer that information into your pay employees by just clicking through the timesheet. Okay, hold on.
is this where the time tracking in preferences would work for you too? To help you track time?
Yes, that's how you activate this section right here to enter in the time.
Oh, okay. How you
But
enter
it should, but every time you enter in, let's say, for example, if I go into my timesheet and I do a weekly, and I hit the wrong button again. Okay. If I go ahead and click here and I do and enter a weekly timesheet, once I validate that I entered this in, when I process my payroll, it should automatically transfer the information directly into that person because we're designating who is keeping track of the time and we're designating the exact date. So when the payroll date comes in, right, it should pull the information automatically from the timesheet into your payroll. Okay? That's how you can use the timesheets for payroll. Okay? Now, how do I use the timesheets to invoice customers?
So you create an invoice now.
No.
No. So you have to time the
In the timesheet,
option transaction.
how do I invoice my customers for someone's time?
Invoice customer time.
Okay, so on the timesheet,
They said that you create an invoice and then that's what they say. The step is to you create an invoice from the I don't know. Something is
you cannot invoice a customer without setting the time. You can't bill your customer for time. Yes.
so you have to billable the time and cost before.
Yes. Okay. So in this case,
Wow.
no, you were getting there. I was just getting you to get there. So on the timesheet, right?
On the timesheet, yes. So you press there
You put the hours in there. You put in the customer name in the customers, okay, /job area, and then you make it.
And I'm gonna ask you if you wanna
Make it. Yes. And then from there, you create your invoice, which then you're going to be in the billable cost window, which you're going to select time.
Yeah. So, but first you open the invoice, and then from there you press the time and cost, right? The button on the top.
But you can't invoice a customer without putting the time in first. Okay, so if I go ahead and do that exact example that you just said, right? If I go ahead and click on create an invoice, right? And I put the customer in there. Let's say this is Maria again. Okay, if I put Maria Cruz branch opening, right? And if I go ahead and click on add time and cost, how can I? I don't have anything billable to them. I don't have anything billable to them. So I have to create that expense first and make it billable to them for me to add the cost and billable. Okay? So that's a requirement here is I have to use it either on the timesheet. I have to assign a customer /job and make it billable to them for this window to happen. Okay?
I understand. Yes, I just understand.
No, just giving you a better understanding here. Okay? There you go. All right, so now it is exactly 3:12. So go ahead and take your 15-minute break. We're going to stop here, and then we'll finish up the last 3 sections for the remaining of class. So with that being said, please be back no later than, what is that, 29? No, 13 plus 15, 28. Please be back no later than 3:28.